Hello everyone, welcome back to Just Invest Today. And in today's video, we're talking about this amazing Mohnish Pabrai interview. This is a new one with a question and answer with these students at the Institution of Management Studies in Mumbai. This was amazing, and he breaks down the value investing approach. He basically lays out the framework for value investing and finding multi-baggers in the stock market, and just what's the best investment strategy and what you should do. And this kind of gleams a lot of insight on what Mohnish Pabrai did wrong in the earlier days and why he switched his strategy and how he's thinking about value investing into the future. So this breaks down so much about his thought process going into the next 10 to 20 years. So in this video, we're going to break it down. But before we do, like this video and subscribe to my channel. I'm providing you guys with so much new content, man. So like it and subscribe. At the beginning of this video, he talks about the value investing approach. What you focus on is going to determine kind of the stocks that you own and what you buy. And there's so many different approaches that you can use that can become successful, but you have to have a focus, because in my opinion, like, you don't have a lot of time. Like, most of us are not full-time investors, so we don't have a lot of time to be sifting through 10,000, 50,000 stocks, because Mohnish Pabrai lays out there's so many different stocks in the market. There's over 50,000 stocks, like, globally or more, whatever. But we don't have a lot of time to just sift through all of these stocks unless you're like Warren Buffett or someone like that. So we really have to focus on a strategy to use to get the best success in our investment journey. So just depending on what you're focused on is what you're going to attract. So there's different strategies in value investing. You can do spin-offs, you can do merger arbitrage, you can buy $1 bills for 50 cents, you can get nets, you can do reorganizations, you can find spawners. So there's so many different value investing approaches, multi-baggers. So what Mohnish Pabrai found out in the decades of being in the investment business is that the multi-bagger approach is the best approach. Finding stocks that are going to 10x in 5 years or 100x in 20 years is the best approach. And he missed out on a lot of these 100 baggers, 50 baggers, whatever it is, because he just switched his strategy. When he first started investing, he actually found these 10x baggers. And after 2000, he kind of switched back to just finding these nets or these PE of 1s and 2s, and he just never switched back to finding multi-baggers. So he said this was a huge mistake in his investment journey of not switching back to finding 10x's or 20x's in 5 years. So multi-baggers provide the best bet in his view. 2 reasons that this provides the best strategy in his opinion: because 1, tax advantages. So you have a never sell approach. So if you never sell, then you never have to pay capital gains on the stock that you own and that you're holding. So that's a huge benefit, and it's like a tax deferred loan that he kind of reiterates. The second reason is that you're not on this hamster wheel / treadmill of buying a company, wait until it reaches intrinsic value, sell it, find another company that's undervalued, and then when it reaches value again or its intrinsic value, sell it again. Not on this hamster wheel or treadmill of just looking for all of these businesses again and again and again. Because remember, we have a finite amount of time for looking at companies. So just find one company or find 10, 15 companies and just hold for the long term is the best strategy in his view. So in order to find these companies and these multi-bangers, we have to switch a cork in our mind. The way he was doing it before of finding PEs of 1s and 2s and just selling it off, he has to switch a cork in his mind now on the way he thinks about multi-baggers. And one of the corks that he has to switch is that if the stock becomes overvalued, he doesn't sell. He just holds on and keeps holding these stocks. The only reason he's going to sell if it becomes egregiously overvalued, and that's the only reason he's going to sell these multi-bagger stocks. And to do that, you have to have a view, and he gives an example of actually owning McDonald's for 60 years, and McDonald's was a 10,000 damn bagger, man. 10,000 baggers. So imagine holding McDonald's for that amount of time. And in order to do that, you have to find companies with a strong moat, and the moat is so key to this long-term mindset. And one of McDonald's moats were brand. The brand of McDonald's was so efficient and so strong is that it beat all these copycat companies that were trying to get into the market, trying to do what McDonald's were doing and just failing. So brand name is so important. That was all about intangibles, and the innovation that McDonald's did was amazing, and he talks about it. The early adoption of not having to use like forks or spoons or knives with like kind of finger foods, that was amazing on McDonald's part. It was a capital light business. On top of that, it served food very, very fast and efficient. So the way McDonald's ran its business was really quality. When you went to the McDonald's, you were expecting the same thing every time. There was no changes depending on location or where you're going. The fries were going to be the same. So McDonald's was an amazing franchise to have in your portfolio for 60 plus years. So that's the companies we're gonna look for, and that's the companies that we gotta think about when we're finding these multi-bagger stocks. So then Mohnish Pabrai goes into the three-legged stool approach. This goes into Chuck Akre and his approach. He kind of coined this idea of the three-legged stool approach, and then Mohnish Pabrai breaks it down. The first leg is all about the economics of the business. We need to have companies with high returns on invested capital. If it doesn't, then we just not going to invest in the company. So high returns on invested capital is the first stool. The second leg is actually finding management with integrity and with insider ownership. I want to find management with a long-term view of the company and how they approach the company and the business. They're not looking to do short-term things just to kind of get this company at a high stock price. They're looking at the long term for the company. And the last leg is all about the runway. What is the run rate for this business? Can we see this business in 10 years still generating high returns on invested capital and not using a lot of debt to do that? And that's very key in this journey on finding multi-bagger stocks that Mohnish Pabrai lays out in this video. The multi-bagger framework that he discusses, that if it doesn't return high returns on invested capital, you're done with the business. And if it has to use debt to do that, you're done with the business. Move on to the next business. If it doesn't have high quality management with good ethics and morals and insider ownership, we're done with the business. Move on to the next business. If the price isn't right, then we're moving on to the next business, man. Find another business that can generate these high returns on invested capital without using debt at a great price. So when you find these businesses that have high returns on equity or high returns on invested capital without using a lot of debt, with quality management, owner operators with long runways, all you have to do is just sit there and do nothing. And that's the main reason why patience is so important. And that's like 70-80% of the battle when it comes to investing, because we want to always do something. We always want to sell something or buy something, and we're just so antsy in the market, especially when we keep looking at the price movements of our stocks. So we really just have to sit there. And Mohnish Pabrai talks about how he lost on so many investments, on so many 100 baggers, 200 baggers, because he just sold way too early. And Guy Spare says the same thing about Crystal. He lost a 50, 100 bagger because he sold Crystal too early. Mohnish Pabrai talks about too, he sold Blue Dot too fast. Like, those were 100 baggers. He sold a banking stock in Mumbai too fast, and that was another 100, 500 baggers. So, man, you have to just be patient, even if you don't see it in 4 years, 3 years. What if at the 6th, 7th, 8th year, the stock explodes? Look at BYD and what Warren Buffett had to sit through just to get all of these returns. He had to wait 4 to 5 years plus to see his investment just shine. So that's what we have to do to find these multi-baggers in the stock market. So guys, please like this video, subscribe to my channel. I'm always providing you guys with so much new content, man. Like and subscribe. Peace.